Today is March the 12th, 2012, and we would be focusing on the US dollar index based on the current market conditions as recently reported last Friday on the non-farms payrolls, which was quite favorable for the US dollar since the job numbers were quite good and showing that the US economy is actually recovering better than most analysts have expected. And this is also in line with the resolution of the bailout for Greece, which has also been one of the reasons why the US dollar have also been moving higher since the resolution have not taken much effect for the euro to move higher, but after the news it stalled and still moved lower compared to the US dollar index. But we would be concentrating on the technical side of the US dollar index here on a daily basis, which we are currently presenting to you, a weekly as well as a monthly basis. But however, let's start off with the daily. Right now, the current market is at the 79.95 from a low of 78.09. But however, here we have indicated 78.077, and this serves as a double bottom on a technical point of view here at the 78.0910 basis, which is also shown here. On the left hand side you will see the low of 78.10, and likewise at 78.095, and this basically have shown strength after it touched this level, which we actually called from our previous market view report. That is why we have indicated here a trend line from the previous low of 74.72 and the 78.09 level as the trend line support. Correspondingly here, you would notice we also have a resistance or a channel trend line as a rising channel, and from a low to the high extension within that particular channel, and the projected daily extensions would be in the area of, let's get it here, around 80.75 would be the extended high or target for the US dollar index on a weekly basis. Concentrate only on the purple color as of now, the broken line, which serves as the first initial target, while working at a Fibonacci fan, lower fan formation, which is resting on the support. Resistance as of now, since the high is 80.13, which serves the resistance prior to breaking it, and extensions could go as high as 80.73 to the previous basis point level as the second resistance level. This Fibonacci you see is from the high to the low, from the high of 81.78 to the low of 78.070910, and the next high is at 80.10, which is actually what it touched here at 80.13, finding a resistance. This is a very good application for the Fibonacci fan from high to low to be able to get the next resistance level. Since it's a Monday, we're still waiting for the midweek's trading. However, let us show you the equivalent stochastics, where at this time it's still quite open with a slight resistance, still on the way up, although there is a possibility that a day-to-day daily corrective move lower prior to an up move, or even before a continuation would be made back lower to the 79.59 or 60 basis point, slightly above the moving average exponential, which we have used here. And looking at it comparatively with the stochastic, it is still bullish at this point in time. But however, considering the fact that the prices would move on a daily basis correctively, but the established trend on the daily from this low to the next higher low is that the dollar is already on its way up. Looking at it on a weekly basis, which is more distinct, from the low to the high on a Fibonacci rising fan formation, where we have established the support levels here, a second higher bottom, which is at the 61.8%, and currently working, like we have mentioned, at 79.97, and the next target would be at the 81 basis point level of resistance from the Fibonacci high to low resistance fan level. So there is an overlay rather between the Fibonacci support and a Fibonacci resistance using the fan formation, other than the normal retracement which most traders are normally using. The engulfing bar pattern here, as you would see, which we used to call a spike formation, likewise serves as a good support, although previously we mentioned that there is a possibility that these two left shoulders, head and a complex right shoulder, would be made, and looking at it here may serve as a neckline, but looking at here on the 7810 level, which is the double bottom price on the technical basis. Let's see if we can get it likewise right here at 7810. There you go. 78.10 basis point, which serves again as the double bottom price or the next higher bottom from the previous low here, and of course the all-time low at the 72.74 level. Now looking at it on a monthly basis, again you would see here a Fibonacci resting at the 38.20% level resistance line and within a rising channel from the previous. So it is within the levels of trending higher, where the level of resistance line here, which is around 80.56 level, with the extensions again at 81.02 or 81 even basis points, where that particular extension would be made. But once that particular trend line from the previous high to the next high would be penetrated, we would be looking at the 82.39 level. But of course that would be within some time, and simply because there's no real straight up or straight down, and that basis would be from a low here of 74.28 to the next high extended at 81.76. So the next resistance level would be at 82.50. Now if the US dollar would gain strength in the next few weeks, once you see an intersecting line between the Fibonacci and the extended high to low, low to high, once that is done, then the 83.17 level or 83.10, which is the opening and the closing of these two particular bars, would be the actual target or resistance 3 level, which may only be achieved more likely at the closing of the first quarter. So therefore we are looking at the US dollar first quarter more likely on the range between the 82.50 to to the 81.50 to the 82.32, or 50 basis points, where it would serve as the third level of objective that it would be attaining. And likewise, this would justify an open bullish formation on the stochastics and RSI combination, where it has more room to move higher, and especially so that we are only on the first quarter of the year. So more likely that the tendency for the US dollar on this first quarter would be within that range level of resistance. That means the US dollar is going to rally, trending higher, and that would be on a purely technical basis. Likewise, we have mentioned that this is on a monthly, weekly, and daily, where the prices has actually moved in a consolidation here, consolidating range, although the range is quite substantial from the 78.09, 10 level to 80. So this will highlight the next target for the US dollar to move higher. Subsequently, the European majors would tend to move lower as well. Thank you very much and have a pleasant day, and hope that this forecast or analysis for the first quarter of 2012 would justify at the end of April. Thank you very much and have a pleasant day.